What does it look like when two leaders, each defined by experience, innovation, and performance, unite to elevate Canadian real estate lending? With nearly a decade of serving the needs of investors, borrowers, and mortgage brokers in the alternative market, Neighbourhood Holdings has now taken a major step forward by acquiring Fisgard Asset Management, forming one of the largest alternative mortgage lenders in Canada. Together, they manage nearly $800 million in mortgages across more than 2,000 borrowers and over 3,000 investors nationwide. Through the Neighbourhood banner, the team works directly with mortgage brokers across Canada, providing short-term mortgages for quality borrowers who may not fit traditional bank criteria. Every loan is backed by real assets, ensuring a measured, conservative approach, seeking to provide investors with stable income while preserving invested capital. Whether you're a mortgage broker seeking flexible financing options or an advisor looking for regular income solutions, Neighbourhood's expanded reach brings track record, transparency, and opportunity, now even stronger with Fisgard's 30-year legacy. To learn more about the Neighbourhood, visit neighborhood.com to view the offering memorandum or speak to your financial advisor today. This is not advice, and consult a professional advisor before investing a loonie in any of these investments. Before we get started, I just want to remind everyone that this information discussed today is not intended to be or construed as investment advice. Please consult a professional advisor before putting a loonie in any of these financial markets.
The dirty secret is that no one's ever going to get paid back.
People have the shortest memories when it comes to investment.
We just got to get Keith into Bitcoin.
Hey, there's a bubble.
Welcome back to Loonie Hour, episode 225. As always, joined by the three amigos, Keith Dicker, Rich Diaz over in Montreal. Rich, what's going on, buddy?
Well, I have an announcement to make. I was about to sneeze right when you were starting to record, but I think I buried it. So if I sneeze a little later, please do forgive me. But no, I have something an announcement to make. It's really cool. So Canadian Space Agency astronaut Jeremy Hansen is confirmed as a mission specialist for Artemis 2, the lunar mission. Scheduled in early Feb, he will become the first Canadian to travel around the moon. And I, being a Canadian and a super mega space nerd, am super proud and patriotic. And I just wanted to give that guy a shout out. He's welcome to join us on the Loonie Hour anytime. But yeah, it's amazing. This guy is an astronaut, fighter pilot, and a physicist. And he's going to be the first Canadian to ever orbit the moon as they prepare to go back there on Artemis 2 lunar mission. So there you go. That was a shout out for today.
Isn't he also the guitar player? Is that the same guy? I apologize for having mixed up.
His CV is already too good.
No, but what is his name? I didn't hear in the beginning.
His name is Colonel Jeremy Hansen.
But was that the Canadian astronaut that played...
Oh no, that's Chris Hadfield. That's the 80s
yes,
and 90s,
it was.
Keith. Welcome to the 21st century, Keith.
Loonie Hour live on the moon.
Yeah, honestly, it's so cool. So there you go. That's a shout out to him. A good luck and Godspeed. And there you go. That's all I want to say. End of show.
Okay. Keith, what else is going on?
Well, we're in the middle of the deep freeze here in Nova Scotia, like everyone else. But what's different with us in Nova Scotia, of course, is that what percentage of us use oil to heat our homes? Rich?
I don't know, probably 20?
It's a trick question, actually.
Oh.
Well, directly, I'm guessing it's 25%. But of course, 50% of the energy of the electrical grid here comes from coal.
Yeah, if not more.
Think of it that way, yeah. Anyway, we ran out of oil a couple of days ago. So
Did
you're
you?
on the phone. Yeah, so you're on the phone frantically, come deliver our oil. And of course, everyone is they're incredibly busy at the same time it happens. So finally, I don't know if they have oil heating, when your tank runs dry, the furnace shuts down.
Uh-oh.
And you don't just hit a switch and it starts again. You have to, now I have no calluses on my hands. I'm a nerd, of course.
You're soft.
But you just don't hit a switch. Yeah, you got to bleed it and do something else. And I'm sure lots of people in the audience today go, well, Keith, you do it this way. But you have to get your oil tank refilled, and then some other dude has to show up, to kickstart the furnace. So but your house, within about 3 to 4 hours, when it's minus 25 out, your house gets quite cold with it. Mm-hmm. So this was the big deal in Halifax over the last few days. So Rich, we have our furnace reset at 11 p.m. last night.
Okay.
About 5 hours of family members expressing very strongly views.
How did Mrs. Icecap take it?
She was the one expressing her view.
Yeah.
So that was.
Guy, you're burning wood and coal over there, eh?
Oh yeah, yeah. Now about 30% of the electrical grid here comes from nat gas as well. So,
yeah,
nat gas, wood, coal, we have it all. Steve, what's new in the land of honey?
Not much. We saw your buddy. We had your buddy Brent Johnson for dinner here in Vancouver. He was here for the mining conference. Some really, great conversation. We'll get into detail there, but lots going on in the world. I think he had some interesting perspectives. I think he's pretty, Keith, I know he's a good friend of yours. He's pretty closely tied to people in Washington D.C. and just a good conversation. We'll have him back on the pod, I think, in the near future. I said to Brent, you're still one of the most loved and hated guests of all time on the Loonie Hour.
I'm sure he loved that, hey? He laughed at it, of course.
There's no in between. I actually told him, I think statistically, if you look at the episodes, I think he's like the number 3 or number 4 most commented episode, 225 episodes. And, usually when you get a lot of comments, it's because people have something to say. So,
yeah. Well,
speaking of which.
Yeah, go ahead.
Speaking of which, last week's episode, got a little heated. I think people, I would say, as expected, given our commentary, the comment section blew up. I think it's got to be in the top 3 based on what I'm looking at. The 3 of us, we kind of sat down after the pod and discussed it. And we read all the comments. We've looked at all the emails that have come in, good, bad. Some people in agreement, a lot of people in disagreement. We understand both views of where everybody's coming at. We're certainly trying to do our best to be as objective as possible. But I think, Rich, you've always said, we don't really hold back on kind of what we're thinking. And we don't want to be a show that, sort of skates through the middle and is sort of plain vanilla. I think that's already what the mainstream media is for. So we have some views. The one thing I'll say before we completely shift gears here is there was an article this morning, front page on Bloomberg. It says, quote, the headline says, Top Canada CEOs Group questions Carney's strategy with Trump. Goes on to say, the head of the Business Council of Canada, which represents nearly 200 CEOs in Canada, questioned Mark Carney's handling of the relationship with the White House after a speech at the World Economic Forum. Carney's speech captured global attention and annoyed President Donald Trump, who accused Carney of ingratitude and claimed that, quote, Canada lives because of the United States. The Business Council of Canada's CEO, Goldie Hyder, said Canada's top priority should be ensuring the review of the USMCA goes smoothly, as the survival of the deal is critical for Carney's agenda of attracting foreign investment. That is all. We will leave it at that. Rich, the Bank of Canada.
Yeah. So the Bank of Canada, so they held rates, as was wildly expected. And yeah, I mean, the presser was kind of, I have a couple of things in the presser I wanted to just highlight. I mean, number one, I think just quickly, I think the word uncertainty was used like 100 times. I really should have had like a little check thing. So I think the presser involved obviously the rate decision. There was a press conference and questions from the press, clearly. And then there was obviously they released a monetary policy report, which we'll touch on a little bit. But really the key thing is the uncertainty is around the forecast is unusually high. There's a couple other things that I thought were really interesting was number one, the press conference, there was so many questions on the US that was like really kind of infuriating. There was no questions on inflation, food inflation, capex, or productivity, which I was just like I was pulling my hair out as I was watching it because I think those are by far and away the most important things for Canada. There was obviously a huge discussion about trade, and a couple of things that I thought were really interesting that I just learned myself. One is so one of the things that he mentioned was, people have talked about lower imports from the United States, and there is actually the data came out a couple of minutes ago or yesterday, whatever. And something I didn't know, which was cool, which was something called diversion. And so diversion, according to Tiff Macklem, diversion explains lower imports from the United States because actually what was cool is that instead of shipping stuff to, let's say, the port of LA and then throwing it up through by rail up to Canada, there's actually so companies from China, for example, are just sending it directly to Vancouver. And so that actually explains a bunch of the decline in imports from the US. So I thought that was kind of cool. I didn't know that. The other thing that I thought was really interesting was my favorite, Carolyn Rogers, mentioned that the number of mortgages rolling over this year will be the biggest in decades. Because a lot of them were taken out of a low rate environment. They didn't really touch on that, but
interject there. That's what we call the mortgage renewal wall, or whatever you want to call it.
Yeah.
So that peaks. I think the absolute peak for those renewals is June, I believe, of 2026, this summer, and then it will slowly sort of gradually roll off.
Yeah, but it was cool. She said it was the biggest in decades. That was what she said. And then Keith, you're gonna love this quote, because a lot of them were taken out in a low rate environment. So I just laughed, because remember when he was like, interest rates will be low for a very, very long time or whatever? I can't remember exactly what he said. So anyway, that was interesting. The other thing that I thought was really important and kind of crazy, and then I'll pass it over, which was Tiff Macklem said, and I quote, "The era of open rules-based trade with the United States is over." End quote. And he said those exact words 4 or 5 times, which to me was completely insane and will be proved demonstrably wrong. You can quote me.
Here we go again.
No, I'm not trying to. I don't want to. No, I'm genuinely. But the idea that he would use that kind of language to me was quite jarring. Clearly, the United States and Canada are going to trade. It's not over. There will be rules, and it will be relatively open. So I just thought it was weird that he said that repeatedly. And I feel like he was kind of setting the stage for some disappointment along the lines. But anyway, otherwise, it was basically not that big of a press conference. I don't know, Keith, if you have a different view.
Not a different view. A couple other things that caught my attention. So Rich and I were sort of following it live, and we're texting back and forth. And I think you effectively at one point, I say, "Hey, what's happening? What do you see so far?" And you said, "TIF, blah, blah, blah." And then you said, "FML."
Oh, yeah.
And of course, I'm like, "What does that mean?" And I asked Mrs. Icecap, I said, "What does that mean?" She said, "I don't know." And then I search it, and it turns out it does mean something. So I didn't know what that meant. It was funny.
Yeah.
And then his immediate next comment was, he said, "Oh, Rogers looks good. She has a tan."
Oh my God. I can't believe you did. I can't believe you shared that.
But these are the things that catch our attention when we get bored. That's what I'm trying to say here. So so the Bank of Canada meeting, there's a lot of very similar topics as what the Fed had, but the Fed answered them very differently. But first of all, one that I think every central banker in the world, they got together, for this week, and they started to defend the independence of a central bank from the government. And we'll get to that. Yeah, we'll get to that when we jump to the Americans. But the Bank of Canada, they brought it up, right? That was, I think, it was from one of the questions. Actually, I think it was.
Yeah, it was a question from journalists.
Yeah, and they were very eager to answer it, of course. And the response is yes, central banks, they should always be independent and separate from any fiscal policy or any political policy whatsoever. They had that happening, and of course, and that conversation came up with the Feds as well. But the other the contrast between the two was about tariffs. So on the one hand, the Canadians are still saying, there's so much uncertainty here. We don't know how to model this, how to look at it, and stuff like that. I think that is accurate, from the Canadian perspective. Especially we have our agreement coming up. I think is it June, guys? It's supposed to be
summer, yeah.
Renewed, or if not at all, we don't. I don't think it will be. Maybe. So the Canadians are still messaging that, hey, this is creating a lot of uncertainty for us. Therefore, monetary policy, we're not quite sure where it's going to go. And that's their crutch. When we jump to the Americans, with the Fed meeting, Steve, then we'll talk about their response to that. Completely different, from the Canadian response. But I think the number one, I guess, market take from this, and this is something that we've been messaging for a while now on the podcast, is that, it's likely that the Bank of Canada, they're not cutting anymore unless they really have to. So if the economy really starts going into a tailspin, and right now it's sort of, I call it grinding. That's what it is. It's not accelerating in a lot of places. It's sort of doing its little thing, and that's it. If it does come off more significantly, I think they will cut. I think it doesn't matter to them what inflation will be. They will have to cut to try to save the housing market, which is, by the way, the housing market is it's not what you own in your backyard. They don't look at it that way. They look at it as a bank's balance sheet. So it's, the same thing, but from a different perspective. But I think that we'll get into later as well, though. The expectations for future rate cuts they're now off the table. And now we're into the view that maybe we're going to get hikes everywhere coming up. By the way, we didn't do a Twinkie bet last week because the Bank of Canada meeting, it was in the bag what was going to happen. So it just didn't make sense. Same thing for the Fed.
Just to recap,
but that was my initial view, though.
Yeah, so just to recap that, like in summary for our listeners to sort of cut through the noise, effectively the Bank of Canada remained on hold. They effectively said, barring some significant changes in the economic activity or jobs, like we're going to be on hold. It's sort of a wait and see approach. Rich, I think the interest rate expectations from markets, I'd imagine that was relatively unchanged post the BOC. You look at the bond yields, they really didn't move. It was kind of like, it was really just a status quo snoozer. There's no rate cuts, there's no rate hikes expected. I think, Rich, as you get into sort of the end of this year, markets are slowly starting to price in 30% odds of a hike by December of 2026.
27.4.
So less than 30%. But again, like so much can change. Obviously, depending on how for example, USMCA negotiations play out, that could have a significant impact on the investment. I think just, Keith, before we switch gears to the Fed, and obviously the discussion around trade and our relationship with the U.S., et cetera, I think it's just important to give a little bit of context and clarity on USMCA for people that maybe are less familiar with sort of the finer details of how it works. I think that sometimes when you just read like a headline article in the media, you just assume that, oh, well, it's up, if it doesn't get renewed this year, we're like, we're totally screwed. So how that works is they have a signed deal right now, Canada, US, Mexico, which expires in 2036. Okay, so it's a 16-year term that expires in 2036. Now they have a joint review as part of the agreement that's up for discussion this year by July 1st of 2026, 6 years after it took effect. So basically, there's a couple of things that can happen here. Obviously, the U.S. is going to try to renegotiate parts of USMCA to get some more favorable outcomes, at least politically, for the U.S. midterms, which, Rich, I think is November?
Yep.
So Trump needs to sort of show his voter base that he gets some sort of wins out of, let's say, Canada and the U.S. So that's sort of like the ongoing discussion. He's going to renegotiate that. He could also, in effect, just tear it up and rip it up and say, we're out. And I think he has to give, something like 6 months notice or something. But the odds of him effectively ripping it up, I would say, are incredibly low. I mean, going into a U.S. midterms and having no agreement and disrupting all of your voters that are running businesses that are importing and exporting to Canada, your largest trade partner, unlikely. And so the ideal outcome here for Canada and probably for the United States is to renegotiate Mexico and to extend this, to renegotiate, get an agreement in place, and to re-extend this another additional 16 years, which will push the pack to 2052. So again, if you're a capital allocator and you're looking to invest, let's say in Canada, if you have an agreement in place with the United States and Mexico until 2052, it's going to give you a lot more certainty to deploy capital. Now, if none of the sides can come to an agreement, let's say by July 1st, what is required under the legislation is that every single year it will come up for rediscussion, renegotiation for the next 10 years. So if you can't come to an agreement this year, it just basically pushes the ball or kicks the can down the road, which ultimately just creates more uncertainty for people trying to allocate capital.
Exactly.
Hopefully that's kind of like the dumb summary.
No, that was really good. Obviously, there's some nuances and stuff. I think we forget just how dependent some of the northern states are with Canada. There's been that map floating around. And the other thing that's really important is that something like 50% of the FDI into Canada is from American firms. And I think that's something we never really talk about, but there's a lot of American money sloshing around in Canada that own and operate businesses. So good, well done, Steve.
Keith, kind of pivots us to the Fed. So again, we had the BOC on hold.
I'm
this
still
week.
doing Loonie Hour math. 16 years. I'm 65. My old age.
You're gonna be like 100 years old, Keith.
Yeah, I know. Yeah.
You'll be set.
Hopefully, by then we'll have landed at NASA, and in partnership with Canada and the European Space Agency, we'll have landed on the moon again, which is really cool. Remember, don't forget about that.
Rich is a treasure, boy, everyone. That's the. Okay, Steve. What else you have?
Well, take us over to the Fed. I mean, I know you're more of an astute Fed observer than I am myself. But Jay Powell was out, the U.S., they held rates. Maybe kind of walk us through the messaging on the rate hold. I think it was expected. The markets were pricing in no cut from the Fed. At this particular meeting, cuts are still priced in moving forward. But for this particular meeting, there was no cut. So maybe walk us through your thought process there.
Yeah, Steve, you would have called it a hawkish pause. I think you came up with that there a while back for the meetings. The no rate cut, that was expected. And what's really interesting, something that Rich has been following for a while and that we've been sharing here on the podcast is, what are the expectations for the Fed cutting rates this year and for other central banks? Remember the divergence between the policies between the Americans and everyone else? It was enormous. And it was almost at a point where there were no more rate cuts expected by, say, the Canadians and the Brits and Europeans. And I think at one point, Rich, for the Americans, was it 1.25 almost for rate cuts this year? And where are we now today? I assume it's 75-ish, maybe?
Fire up that computer, Rich.
Fire it up.
If I start lagging,
you guys will be able to
know
hear
why.
it humming in the background.
Rich's computer runs on diesel. That's how big it is.
Oh, no change. There are no hikes priced in for the rest of the year, and
for the Fed, no
no hikes. Obviously, what it is that the cuts have started to reduce. If that makes any sense.
How many are priced in now?
So just to give you
were saying that originally 6 were priced in for this year. Originally,
yeah. And now there's a 90. Yeah. So basically the curve has moved up by 25 basis points basically over the last month is what I think he
on that down.
And so this is the theme that, we've been looking at, and that made no sense. So if the Americans were cutting rates by that much, that aggressively, chances are other central banks would have to do that as well. Maybe not by the same amount, but this is a theme for the conversation today with other markets as well. The gaps in the correlations and markets moving together, everything is completely out of whack, which means we're going to get extraordinary volatility. And it's not already started to happen. But back to the Fed meeting. So they said, hey, no rate cut. That was expected. It was there was a lot of political questions as well, just as the Canadians had it. So remember, Powell was charged with a criminal charge, or what would you call it? It was a criminal offense for the renovation or the new building they're putting in. He had multiple questions about that. And he just said, no comment. I can't talk about that, of course. There were a lot of questions, of course, about, independence of the Fed. And I want to come back to that point as well. So Steve, remind me to come back to it. He said, hey, no comment on it. He sort of danced around that. He just didn't want to get into that political discussion today. So some of the best questions and answers, by the way, I think I have 21 questions on my notepad. I think 3 were acceptable. The other 18 were like, blah, like, come on, guys, you gotta do better.
That's how I felt about the Canadian one.
Yeah, it was really bad yesterday, but there were some really good questions, and one question that was not asked that we're going to come back to. So first of all, it was almost like the second last question, and the answer was all about productivity. So the question was basically, why is the American economy doing so well? That was the gist of it. And he talked in length for maybe 3, 4, 5 minutes, Steve, about productivity gains and how that was driving the economy. Because the GDP number right now for Q4, it's the Q4 number that the GDP now is looking at.
Yeah.
It's probably coming out tomorrow, I'm guessing.
Which one, the Atlanta Fed or the New York Fed?
The Atlanta, the Atlanta one. It's like 5% plus, hey, like extraordinary.
Well, it dropped slightly
growth.
over. Sorry to interrupt you. It dropped slightly over the last couple of weeks, but it's still above 4, so it's very strong.
That's the wrong
All
one.
the
It's
AI
a different
robots
number we're looking at.
I'm looking at it right now. It's
you're not looking at the right one, but
it's very strong.
But the point he was making is something a conversation we have a lot here with the Canadian marketplace. We have no productivity. It's not happening. The central bank has gone out of its way a couple of times to be in a very soft way to say, hey, we need more productivity. And productivity doesn't mean you just show up and work harder. You know, you can work really hard, but you're still producing the same output. That's not productive. That's not what it is. But the Americans have productivity that's taking place that's helping them. The question about tariffs, and this is where the answer was different than the Canadian side. Remember, the Canadian response is, it's a lot of uncertainty for us. We don't know how to look at it really. We're still wait and see and wait and go. And that is correct for Canada right now. For the Fed, however, they said, you know what? Like, all that noise is now over for us. We have very good visibility for the impact or the effect of tariffs on our economy, and we're quite comfortable where that's going. And when he means comfortable, he means visibility. We can see the effect it's going to have. So for the Americans now, from a monetary perspective at the Fed, they're not freaking out over the whole tariff discussion. So it's not have a big impact on them as it is for the Americans' trading partners. And then the other question was, I thought it was one of the better ones. It was, the reporter said, hey, you know what, like everything is awesome right now. Those are my words. But hey, economic growth is okay. Labor market is okay. Productivity is good. You know, why are you cutting rates? The stock market is at all-time highs, stuff like that. And his immediate response was, we didn't cut rates today. Which, is a bit of an eye roller because the reporter didn't imply, today. But it was really coming back to the conversation that we've had before, is that the Americans need to create and generate more liquidity for the banking system, because if not, the entire banking system sort of grinds to a halt. That's why they're trying to cut rates, which also then leads to the question that wasn't asked, and I thought it was the most important one. Do you remember? Do you know what it is?
I think I know where you're going with this.
Which one is it, Steve? What do you think?
Are you going to ask about the yen?
Nope.
No.
I know.
No. That was asked, by the way. There was a yen question. Right. Anything related to currency, by the way, a central bank will always say, that's not our problem. That's not our arena. That belongs to the Treasury Department. A central bank will never comment on the currency side because it's not part of their job. That's what the Treasury will handle. So they're right to say that. Rich, what is your answer?
About quantitative easing, about how the Federal Reserve balance sheet, I'm going to sneeze. No, never mind. Sorry. The Federal Reserve balance sheet is starting to expand again.
Yeah, absolutely. There's nothing about QE. So remember, they just...
Don't call
I'm watching QE. Rich kind of trying to sneeze. Like, you ever see someone sneeze face?
I'm sorry.
It can be awesome. We just got a good glimpse of Rich's sneeze face. It's face only a mother would love.
Carry on.
Yeah, but there was no question on QE because remember they restarted QE one meeting ago. QE. I think it was.
It's not called QE, says Steve.
Yeah, that's right. It's not called QE. But remember, we were guiding people that is where we were headed. And we had some emails that say, you guys are crazy. They're not going towards QE. And of course, it was very easy to see that they would be going to QE. And that's because the amount of reserves in the banking system is not enough for commercial banks like the JP Morgans and so forth to expand their balance sheet to lend, to lend money into the system. But, with the Fed not cutting rates anymore, and they were more hawkish than anything, but they're still doing QE on the side. And then the last comment, of course, even though Powell said, he didn't try to make it a political presser yesterday, they basically went, against everything that the White House wants them to do. They want to cut rates, they want to be dovish and all that stuff. So it's real interesting. And so that's the first thing to say. Anything that you saw?
No,
Rich?
sorry to interrupt. Can you just, maybe I missed it. Can you just remind me where Fed rate cut expectations are now for the year?
So the terminal rate, let's say, where the rate basically stops falling and may even start to rise, for December of 2026 is three and okay, let's say 3.25. Let's just say to keep things straightforward.
So where is that from there to 50 basis?
So for right now we're 3.6 and it's going to end at 3.2. Let's just say so 2 more rate cuts basically.
Okay. Well, I mean, to Keith's point, I mean, we were at 6 at one point, and now we're down to 2.
Yeah, I can tell you right now where we were at the top. We were 5.5 for the U.S.
When was that though? Like December, November?
No, the 5.5 was middle of 2023 to the beginning of 2025, middle of 2023 until October of 2024, right before the election, where they cut 50 basis points. And then now we're at 3 and 3.62, and the terminal rate is 3.20 or 3.15 or whatever it is.
Keith, that brings you back to the Fed independence.
Yeah, it's so that was a big question, of course, because I think most people know that Jerome Powell, he's the head of the Fed, if you want to call him that, right now. His term is up May. June?
May.
One is
I
it?
think it's May.
In May. And he's going to be replaced. And it is the White House that names the replacement. But I want people to appreciate that it is a democracy at the Fed. So for this meeting they had yesterday, I think with the vote 8, I think it was 8-2.
10-2.
So 10-2. So 10 voted to stay where they are. And then 2 guys, they voted they should cut rates. The 2 guys who voted to cut rates, they're both competing to get the new job as head of the Fed, so it's, they're interviewing as they do this. However, let's just walk through, for example, and say one of them, I think it's Kevin, what's Waller's first name? I forget Waller's first name.
Sorry.
We'll call him Mark. No? We'll call him Mark. So Mark Waller.
Christopher Waller, no?
I think it's Chris Waller. Whatever.
Okay, so Chris Waller, say he takes over Powell's position as Fed chair. He can't make that decision on his own. Like it's not a dictatorship where he can say, we're cutting rates. He can try to guide the conversation to that, but at the end of the day, they're still going to vote. So there are 12 voting members at the Fed. Mm-hmm. So say he becomes the next head, and then it's, for that meeting, he votes, we should cut by 50 or whatever like that. As of right now, today, you still had 8 people that said no cut is necessary. So let's not get completely lost in the belief that the new Fed chair is going to start cutting rates right away. He has to convince the other members that they should be cutting rates as well. I hope that makes sense. It's very important.
There'll have to be a criminal indictment against 11 other people. Sorry.
It could happen.
Which again, we all agree that's absolutely insane. I think we probably also agree that the central banks are air quotes independent, but not really. I think obviously Trump is just very vocal and upfront about his obstruction of it.
Yeah.
Which is insane. Which I think we can all agree on, indicting the Fed chair to try to get them to sort of abide by your request. But I think we should also not be naive to say that, listen, Tiff Macklem was Mark Carney's number 2 guy at the Bank of Canada. So when Mark Carney is running an $80 billion deficit, do we really think he's not picking up the phone and be like, hey, buddy, you got to help me out a little bit?
Well, Steve, you had a lot of angry comments last week for saying something along those lines.
Well, that's why I brought up the quote, the era of open rules-based trade with the U.S. is over. We've heard that sentence before in a different speech at a different time, and for Tiff to mention it But anyway, the other thing, Steve, is as obvious as in the Bank of England when everybody remembers Liz Truss versus the head of lettuce a couple of years ago, when she came out and wanted to cut taxes and regulations or whatever. Andrew Bailey, who is the head of the Bank of England, came out and basically said this is a stupid idea, and they let the currency crash and the bond yields rise. Christine Lagarde, God love her, hates fossil fuels and is angling to basically constrain the ECB banking system to lend to those companies. So you're right we should be a little bit skeptical when they're bleeding heart, pounding the table, saying they're independent. Yes, and also no.
But so back to the central banks again. Yes, they should absolutely be independent. However, let's not be naive, as the word you use, Steve. They are influence sometimes.
Influence, I think, is the right. Things. Yes, I think that's the right word. Is they are politically influenced, but they are.
It's all the same networks and everything, and that makes sense. I mean, it's the same with the private sector for everything. I mean, you're the CEO of a major bank in Canada. I mean, you're chatting with all the other CEOs and the company's borrowing from you and stuff like that. You all know each other. That's the way it works. But I just want to just share with central banks, they're not pure and they are not perfect. And so to summarize first, they are always reactive to a crisis, and their solution to a crisis, it always sows the seeds for the next crisis. So for example, we had the Russian currency crisis back in, I think it was 98. And that developed into the long-term capital management. That's a big hedge fund down on Wall Street that was fully backed by all the major brokers in Wall Street. That thing toppled overnight. Fed bailed them out, cut rates down to zero basically. And okay, that saved Wall Street for the day. And what did that create?
The housing bubble.
No, the tech bubble.
Sorry. I'm one bubble ahead. Pardon me.
Yeah, it creates the tech bubble. The tech bubble does its thing and it breaks. And after it breaks, the Fed, they bail out people again. They cut rates, down to near zero, leave it there way too long, which then that creates the
housing bubble. Excuse me.
It's like bubble. Like Moneyball. Richard Keith. I'll point at you. You answer. You got the housing bubble. That breaks. They bail people out again. And then they cut rates down to zero, of course, in QE and everything. And then that just then accentuates or accelerates the debt bubble, and that's where we are. Yeah,
the everything bubble.
And it also created, though, it really accentuated the whole, wealth/asset, inequality, experience that we have today. So again, central banks, they're not saints. They're proactive. They're not proactive at all. And so this whole thing about, we always had to protect, someone's getting mad at them, it's kind of theater in some ways. But again, all the volatility sort of that was suppressed last year, and now it's coiled and it's starting to just spring up again. A lot of this has been encouraged by the central banks, not just the Americans, but all the central banks. This is great theater. This is really setting up for some. Even today is Thursday. We record on Thursdays, of course. And even earlier today, markets hit like a 180, like that, because of the way things were set up.
Terrible sound effect.
It's like Rich taking a slap shot with his old Sherwood stick or something.
Scored a goal last night.
Keith, do you want to mention the what's happening with the Japanese yen? I think the U.S. has been involved. Secretary of Treasury's Besant has been, discussing it publicly. I think the U.S. dollar has been impacted a little bit, but there's been a lot of volatility in currency markets.
But by the way, when it comes to finmins, finance ministers, we call them finmins in our world, or treasury secretaries in some places, this guy Scott Besant, when he's speaking, man, pull up a chair. You never know what it's going to say. My favorite comment when he was over in Davos was about the food. Did you see that one?
No.
It's a classic. Just check it out. And he said, I hate the food over here. I can't wait to get back to America to eat better.
In Switzerland? They have great food.
Well, it's not doesn't
Davos,
rake
bunch
up.
of super rich people in Russian labor.
Yeah, but Swiss food is not the best in Europe. Let's agree with that.
Fair
Anyway,
enough.
this guy has great observation. Steve, with I think people know what's happening with the yen in that basically their government bond market it needs 100% support from the Bank of Japan all the time. That was starting to create a mini crisis for long-term bonds in Japan. And the currency was going down at the same time. So last weekend, the story started to float that the BOJ is speaking with the Fed/Treasury, because they all work together, to maybe come in and do some currency support for the yen. It's my understanding today that it didn't happen. So there was no transactions taking place. But the mere suggestion that the Americans are going to get involved with currency intervention to support the yen, that means selling US dollars and buying Japanese yen, by the way. So you have that taking place, and then the knock-on currency effects as well. So that's why we saw maybe a 2% plus swing in the dollar over the last few days. That was from the Japan incident. So I think that's what you're referring to. Nothing has happened yet, but again, just the suggestion that, the guy with the big stick is going to, hit you, you tend to flinch right away. Have you seen something different or heard something else?
No, I mean, I think it's just been a core conversation of our podcast. I know it's one that you've followed quite closely, obviously, directly correlated. They're like years ahead in terms of like the sovereign debt bubble and all the shenanigans that the central bank has been doing over there to sort of keep everything, moving along in the right direction. But
for Japan,
it's almost like a precursor, right, to where kind of all the other major central banks are going.
Yeah. So think about it. I know, Richard, back during the pandemic, the Bank of Canada purchased, I think, 92% of all federal government debt that was issued. And
over a 2-year period. Yeah.
Yeah, that's the decision they made, and that's what they did. By the way, whenever there's
sorry,
yeah, that is funny. Whenever your government's bond market is in crisis mode, the central bank will always bail them out 100% of the time. It doesn't matter whether you agree or disagree with it; they are going to do it. And that's good to know because you know what the market reaction is going to be. But so the Japan experience, if we had that in Canada right now, it would literally mean every time that we are issuing debt in Canada, the Bank of Canada is the one buying it. Like that's how severe it is in Japan. It's the ultimate zombie economy. I know people go there, the food is awesome and stuff is happening. It's not the end of the world or anything. But underneath the monetary system and the debt system, it has reached the end of its useful life. But no one is going to benefit if it cracks in two. So that's why the Americans will step in. Same with China. Like if China is about to crack in two, who are they going to call for help?
Scott Bessent.
Yeah, absolutely. They're going to call the Americans. Say, hey, this is happening. And the Americans are going to say, I know some Americans want to see the Chinese crack in two.
No, I think that's, no one wants to see that.
No, that's not true. Some do from the military side. I know that. But from a financial perspective, the guys that are really running this show in the banking system, no one benefits from a major country economy, sort of called cracking in two. So you're always going to see, these things happening or just a suggestion, that could happen.
Well, Keith, that brings us to ultimately, when the central banks are involved as they are in the sovereign debt market, the release valve tends to be your currency. Of course, we've seen the Japanese yen fall roughly 50% against the US dollar over the last decade. Historical move. And I think that kind of almost segues into what we're seeing in precious metals markets this year or over the last, call it 12 months. I think, again, like this week alone, gold up again. I think we're at $5,500 an ounce now.
Careful. We're down 3% today.
All right. Well, it'll be back up 7% after the end of the recording here. But the move in precious metals, I think has to be signaling something, which is sort of this reshuffling of the deck. I think people can see the writing on the wall, and it is kind of. I think it's just a currency debasement play. I think people are worried about that, and central banks. I think central banks, Rich, correct me if I'm wrong. Central banks are still loading up on.
So that's been debunked recently. There's this great. So we'll talk. Maybe we'll
More
talk about this
holding the value of the actual asset going higher.
Yeah, exactly. So there's an argument to say there's a really great strategist. I think his name's Robin something or other. I can't remember his name. Sorry, but he just put out a note basically are debunking that specific thing. But what was funny though, quickly, Steve, is that somebody asked Jerome Powell if he thought that the rise in precious metals had anything was like significant or newsworthy or whatever, and he like totally brushed it off. Of course, Twitter basically is having a field day basically. And it's not just precious metals, to be very clear. It's also loads of industrial metals. So copper, maybe it's for a different reason, but they're all moving together and they're all moving in tandem, and they've all jumped quite a bit. Copper, zinc, tin, all the whole suite of them are all jumping a lot.
I think one of the things I saw interesting. I don't know if you guys saw this news story, but Tether. So people that are you familiar with Tether? I mean, Keith probably isn't, but
no, tell me. I kind of know.
Yes, Keith is. Yes, Keith is.
So Tether is basically like a stablecoin issuer. They were kind of like, I think there was it's funny, Keith was actually chatting with Brent about this at dinner, but I think it was well regarded in the industry that there was a lot of question marks around Tether and its viability and the antics that were happening behind the scenes, that at one point was it sort of artificially supporting crypto Bitcoin prices, effectively printing stable coins almost out of thin air. And I think they've almost kind of morphed into a different beast with the stablecoin, the Genius Act that was brought in by the White House, I think over the last year. And now seeing that Tether is loading up on gold as effectively like a reserve asset on their books. So Tether now holds around 140 metric tons of physical gold valued at roughly 24 billion. And I think it's one of the largest holders of gold outside of any major country.
That's pretty cool.
So they're
not
almost like legitimizing their balance sheet, I suppose.
Yeah.
But.
It's by the way, I was supposed to join Steve for dinner, but I got snowed in. My flights were all canceled, and then I lost my heat in my house with the furnace stuff. It hasn't been a great week that I thought it was going to be. With the whole gold stuff, I think it's it's doing really well right now, but it's almost at a vertical pace. Except we're going to talk about what happened earlier this morning, a couple hours ago, of course, for all markets, not just gold. But when any market has a near vertical change, either up or down, at some point it sort of runs out of energy. Think of it like a geyser. If you ever been to Wyoming, you can see the Old Faithful, for example, something like that. It goes up and it pauses. So if you're in that market, just be very mindful, because it's highly likely it is going to reach a peak very soon, and it is going to have a correction. Like it's not always a one direction trade. When any market is going to one direction, it always feels, oh yeah, this is never going to stop. I mean, like the crypto world had it twice now, I think, right, Steve?
The Toronto pre-con bubble too.
Toronto pre-con bubble.
I heard that Pitbull was
like
at the Vancouver Resource Conference this year.
Like the rapper Pitbull?
You ever notice that?
No.
So every time there's like a bubble, Pitbull is called in to do the
Is that a real thing? Come on.
He was at like the Toronto pre-con real estate conference back in like 2021. It's like, why is Pitbull there? He's been there like multiple times. He's like
just a musician. He calls himself Pitbull.
Yeah. Oh, Keith.
What is he? What is he saying? I have no idea. I've never heard of this.
So seriously, anecdotally, the Vancouver Resource Conference is like the largest sort of like mining conference, I think, in North America, Keith? Like it's huge.
Yeah.
We have it here every year in Vancouver, and just let's just say there was a lot of buzz this year. It's kind of, obviously precious metals have been in, I wouldn't say a bear market over the last 5-10 years, but there's a lot of excitement right now. Yeah. And so from a sentiment indicator perspective, bells are ringing.
Interesting.
Well, it's sky high, right? It's sky high from a sentiment, So I'm not trying to be negative on it. I mean, we hold bullion. We'd love to hold a lot more, of course. But with any market, when it has such a severe move in one direction, and when just be mindful of how much risk you have on the table. And if you feel like, oh yeah, I got to start buying now, everyone's buying it, you might be the guys providing liquidity to the guy who's getting out. So I know at the conference, Steve, I think it was Rick Rule who was talking about silver, how he sold his silver.
I believe so. Yeah.
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 So
Silver's outperformed gold. Incidentally, people may not know that.
Well, it will. I mean, silver has a beta of like 5 or 6 times of gold. But I know, like, for example, one of the things that we look at for portfolios right now is volatility. It's not just for equity markets, for all markets. There were no volatility last year. Things just did its own thing. There's no risk. When that happens, there's a lot of complacency for investors. They think, oh, this is easy. Let's just, keep buying gold. Or no one's talking about Bitcoin anymore for some reason.
How dare you, Keith?
Do you know why?
I don't know why.
Because it stopped going up, of course, right? Like that's the deal. But it's a good sign that.
Have you seen those memes? Have you seen those memes online?
Yeah. Which one is it? Is it
I think hilarious. I know which one. Describe it, Steve.
So it's like I can't remember what movie it's from. But anyways, the guy's like in his car driving.
One thing after another, or one battle after another, whatever.
He's in his car driving, and he's like basically like tearing up when he's crying. And like the meme is basically like when you got the currency debasement trade, but you were in the wrong asset class, which is basically like a nod to like all the Bitcoiners that like, hey, this is the true. And obviously like gold has grossly outperformed Bitcoin over the last couple of years. Yeah, it's just,
it's
the internet is undefeated.
Point.
The internet.
But it just shows though, you never, you never, lean over your skis too far, basically. Do you know what I mean? Make sure you are comfortable with your exposure. Because in crypto's defense, like it outperformed gold for a long time.
Yep.
Right, Steve? It definitely, I mean, everyone's making fun of, the gold guys. And now it's reversed, of course. And, I imagine at some point soon this will reverse again the other way. But with one of the themes to look at now, hey, volatility, it's now coming back. And it's coming back with a vengeance, it's starting to rage. So because something didn't happen last year doesn't mean the risk had disappeared. It's now front and center. But I know that we put together a bunch of charts that Rich has been looking at, comparing, for example, crude oil to precious metals, base metals, the inflation rates in the U.S., and then the balance sheet at central banks. If there's any market in the world that's incredibly cheap, it's crude oil. That's what you would look at from this, as well as, the percentage of traders who were short the market and so forth. So, and if you look at gold, it's sort of the opposite. Everyone is all in on that.
Go ahead.
Yeah, well, you've also had copper. Copper's at an all-time high now. So it's $14,000 per metric ton.
Yeah.
What's interesting is in the 10%, having double-digit moves right now.
What's interesting is in the past, it used to be called Dr. Copper because it used to be an indicator of growth, which was often led by China. And because of either electrification or real estate or whatever it is. And now it's funny that sort of that story is like long sort of dead. And this is a function, I think, of people sort of partly the electrification theme, but also because of the hoarding, because of supply chain stuff, and because there's a massive supply. There's not enough supply basically for what people think will be need to use for EVs and AI and stuff like that. There was a really interesting article about that, like the massive basically undersupply of copper, just full stop. I thought it was really wild.
It's the whole commodity space, and with that theme, there's lots of great, equity charts right now that shows valuation tools, whatever you want to use. Things are, again, every market is now stretched in one direction or the other. And it's incredibly unlikely that will continue. Like you do get, it's not just a reversion to the mean. You get a quick snapback in one direction or the other. And we're starting to see some things here right now. So that's what we're a bit excited about. Do you guys want to do Iran real quick?
Well, yeah, Keith, before you segue there, you had, I think, which probably takes us into Iran, which is, you've talked about oil on this pod. I think, a couple months ago, I think, oil was kind of near the lows, and we took a bit of flack. We had some emails coming in, obviously, like, how can Keith be bullish on oil? And obviously, it's had a pretty big rip since. So we'll see. But I think a lot of this is correlated to, of course, what's happening geopolitically. Now segueing into Iran, where they have the largest U.S. naval carrier has now arrived.
Yeah, arrived. Sure. I mean, it was in the Pacific theater, I think is what they call it, and we flagged it a bunch of weeks ago. And the U.S. said, "Listen, we're moving it into or close to the Red Sea." I think let's just take a second to think about all of the people in Iran. I think I've seen it's so sad how many civilians are being killed by their own regime, unarmed civilians. I've seen estimates anywhere between 30 and I've seen upwards of 90,000 people killed in cold blood simply for wanting to express their, I think, God-given right to democracy, freedom, not to have to wear head covers, to be able to eat McDonald's and have the internet. It is a really, really, really shitty situation there. It really makes me sad. Let's just park that for a second. The fact that the U.S. may or may not get involved, I think, is what's driven the volatility today. Obviously, if this regime does change, I think it'll be probably the biggest shift in geopolitics since the Berlin Wall. I think just because of all of the knock-on effects with whether it's Hezbollah or Yemen or it's, the ties to China with respect to crude oil, Russia's involvement in Iran, propping up that government for as long as they have. I mean, this is a huge, huge deal. Incidentally, it's not being covered by some of the more important mainstream media outlets, which drives me absolutely bonkers because, I mean, the Persians are an ancient and rich and beautiful civilization that deserve to be part of the world. Frankly, sorry to put it sorry to say it like that, but it's true. And the amount of people who are basically dead in the streets is absolutely heartbreaking. Sorry to bring it that way. Maybe we'll shift gears, Keith. I don't know, bail me out of this spiral of sadness.
I think, Rich, it's always incredibly important for everyone to appreciate. We're talking about numbers and trends and things like that, but there are people behind the scenes, and because the way our media likes to shape different narratives, a lot of people are just not aware what is happening in Iran. So that's a very strong voice that you have for sharing that with everyone. Let's just sort of switch it then, in an insensitive way to sort of where this is headed. And again, it doesn't matter whether someone agrees or disagrees with what's happening. We have three outcomes coming up here. So the Americans, they now have their military equipment positioned where they want it to be positioned. They moved non-critical people from their bases away, and all that is happening. So the three scenarios: one is that the Americans do attack directly the Iranian government, and we know what that is going to look like. It will not be pleasant, and it is absolutely going to rattle markets if it happens. The second outcome is that they do not attack directly. Instead, they do an embargo. So they will prevent the Iranians from exporting oil out of their markets. And that's also going to have a very significant financial impact. You will see that. The third outcome is that they come to an agreement. So the agreement will look something like the Iranian government will say, okay, we'll stop making nuclear missiles, and we will do this and that, and everyone will be happy. So that delays the so-called economic or military attack. If that happens, I assume it will just last another 6 or 12 months, and then they're back there again. From an economic perspective, China does not win with this at all. Because how much of China's oil imports comes from Iran?
A lot, a bunch, like
it's
12%. I can't remember I lost the
Yeah,
charts in the chat. Sorry, it's a lot. It's I mean, they produce 4 million barrels a day, and 75% of it goes there. So 3/16, Loonie Hour math. Anyway, 30%. A lot.
And they're also big producers of nat gas as well.
Yeah. Huge. That's how Iran runs its electricity grid, is off for natural gas.
Yeah, so
I shouldn't have said 30%. It's a lot.
Stuff here going on. I mean, so one of the reasons that we think oil is going to go higher. So you have in our mind, you have the whole supply demand
Mismatch.
imbalance that's taking place. In our opinion, the cost of shipping stuff is going to go up anyway because the America First, domestic focused strategy, which we've already talked about. So when we look at that and priced relative to other metrics like the Fed balance sheet, inflation data relative to other markets, it just seems so easy. The geopolitical stuff, that's just sort of the insensitive cherry on the top, so to speak here. And so I think WTI is, what are we at now? 65 now? 64?
65.
Yeah, something like that.
65. Isn't that crazy? I think last week we were at 59.
Well, I can tell you exactly when we bought them, looking at the chart. So
Like
we bought them
55-ish, I think.
We bought them
around
at 56. Well, this is a daily chart, so intraday was probably a little bit
bottom?
lower. The middle of December, at $55, let's just say for argument's sake, and now we're at 65.
And by the way, as an investment manager, you need to buy stuff at the low, not the high. Right, Steve? That's the way
Let me
works.
write that down.
Buy at the low.
But Keith, isn't there a fourth scenario though? Sorry to interrupt you, but isn't there a fourth scenario, which is as unlikely as it may seem right now? The fourth scenario is that the regime stays in power, they crush the protesters, and the U.S. changes tact or slinks away. I mean, it is possible?
Yeah, I would put an incredibly low probability on the Americans. They won't tolerate that.
Just to tie into Rich, I know we don't want to get too involved in this, but so according to the U.S.-based human rights activist news agency, they've reported 5,500 protesters have been killed since demonstrations started late last month, and they're saying that an additional 17,000 deaths were still being reviewed, which is obviously very, very sad and significant, and hence why you're now seeing the USS Abraham Lincoln is now sort of effectively parked there. So that carrier is crazy, Rich. It's carries up to 90 fixed wing aircraft and helicopters. Yeah. It's one of the largest naval carriers.
It's one of the largest ships in the world. Period, if I understand correctly.
Nuclear? I thought it was powered by wind. No?
Some guys up there just holding the solar panel.
Yeah. But earlier this morning, again, we're doing this. Obviously, the news headline came out. Again, there's so much noise out there, but it was a strong suggestion. Negotiations have broken down again, and it looks like there will be some kind of a action by the Americans. And when that happened, equity sold off, gold sold off, and people trying to wrap their mind around that and why. One, you had the vertical rise, but people need liquidity when things happen. Crypto sold off. I said equities. So the only markets that appreciated, one was crude oil and the US dollar. Yeah. So the US dollar immediately ripped higher on this. So if we do have an event here at some time, maybe it's already happening, by the time this is, this episode is launched, you're going to see extreme volatility again. And whether it's a 48-hour experience or it could be something a bit more permanent that creates different plateaus for different markets again. So that's why you want to make sure, you always have some liquidity on the side. never go all in on one strategy or one market, because hey, stuff happens. Like Steve's crypto meme guy in his car.
All in silver miners, triple
Yeah,
levered.
crypto sold off, hard as well. But again, this could be a big market event, and maybe it doesn't. Maybe it does get whitewashed out, and we're back to our regular events next week.
Hey, just to add on that. So we'll keep an eye on sort of all the the market stuff, volatility. Keith, we got a really good guest coming on next week. I'm not going to name drop it, but
unless they change their mind.
Yeah, every time I've name dropped our guest, I've tweeted it out hey, we got this person coming on. They've always canceled, so I don't know what's going on. So I'm not going to jinx it, but I'm super. I'm assuming.
Well, yeah, Mick Jagger. Mick Jagger is coming on with Jim Morrison.
Is that from the singer from the Beatles? Yeah.
If they don't bail, it's going to be an unbelievable interview because I'm super excited.
And the timing could be pretty.
Timing is good. Well. Timing is very good. But to that point, just as we sort of get towards wrapping up, Rich, I know there's one thing that you wanted to mention. This kind of ties into some of the earlier conversation about the Bank of Canada, and the Fed obviously talking about, hey, listen, the U.S. is having great productivity. That's sort of helping the economy, and this is why we don't need to cut rates as much. Whereas in Canada, we've talked about the productivity crisis. Carolyn Rogers, the BOC, calls it the break the glass moment. There's actually an interesting paper out this week from the IMF, the International Monetary Fund, which is effectively the central banks of central banks. And so, Rich, you want to walk us through just quickly on that report that they came out on Canada specifically?
So basically, the IMF does lots of different WEF. I'm sure, the IMF has its own checkered past. See South America. Anyways, but the IMF basically has amazing research. If you want to do a cross-sectional data mining on debts and unemployment or whatever, they do forecasts. I don't put too much stock in the forecasts in general, but they have them. It's great. They also have a part and section of their organization or whatever that does research, long form. It's a bunch of super smart PhD kids, PhDs that do deep dives into specific topics, whether it's commodities or productivity or country. And they do what I'm looking at and we're going to talk about is something called the IMF Country Focus. And they basically did one on Canada. And it basically starts with Canada is one of the world's most open economies. Over decades, it has built a deep and resilient links, blah, blah, blah. So yet at home, Canada's economy remains much less integrated than its global footprint. So new evidence puts some of these numbers, into perspective. And it says, this is totally wild. Using widely accepted trade analysis methods, we estimate that non-geographic policy-related barriers within Canada's average the equivalent of a 9% tariff nationally. Now that's quite a bit lower than the original estimate from 2019, I think, which was in the teens, in the high teens. Nevertheless, it's very, very, very high. And I thought what was really crazy was here we go. According to the model-based simulations, again, you have to take that with a grain of salt, but it's really about the overall view. Fully eliminating non-geographic internal trade barriers could raise Canada's real GDP by nearly 7% over the long run. So that's just wild. And then of course, it breaks it down by provinces. So some provinces, Ontario, don't actually stand to gain much. Interesting. Just keep that in mind for a future reference. Other provinces, certainly in the East Coast, Prince Edward Island, and New Brunswick, Nova Scotia, Labrador, they would increase real GDP per worker by upwards of 20%. Just think about how, that's insane, right? That's a lot of improvement in standard of living, revenue, on and on and on. The other thing I thought was really interesting was that Tiff Macklem actually referenced it. So he actually said, there are, and then so Tiff Macklem said there. So to corroborate the IMF's findings, he said in the press conferences, there are estimates that we could offset the U.S. tariffs on Canada if we completely opened our international trade. which I thought the timing was perfect. I'm sure Tiff Macklin was probably abreast of the fucking the IMF trade thing. But it's just wild how hamstrung we are as a nation. There is like, if we can just get out of our own way, I think it's incredible how much opportunity there is. Of course, there's politics and unions and politicians that are dead set on trying to not let that happen. But it is amazing, basically, what an own goal really that is.
Which actually, as we again wrap it up here, but there was an interesting press release from an incubator called Y Combinator. It's very, very well known. What is it, Rich? It's got to be like the largest like tech incubator in like.
Oh yeah, you would know if we. I'm just gonna Google Y Combinator. I mean, you would know all the names. It's some crazy, yeah.
So they basically released saying, so Silicon Valley's most famous accelerator now requires Canadian firms to incorporate it in the U.S. in order for it to invest. So they have to either incorporate in the U.S., Cayman Islands, or Singapore. And so there was a lot of like blowback, pushback, Canadian commentary. Gary Tan, who's the president and CEO of Y Combinator, he came out and tweeted, and he says, in Y Combinator's 20-year history, Canadian startups that reincorporated in the U.S. have 2x'd the average valuation of those that didn't. And the ones that unicorn or near it all reincorporated in Delaware. I love Canada. I'm born in Winnipeg, but don't let that get in the way of making a huge startup.
So Steve, just to give you quick, I just Googled it quickly. So Y Combinator is basically effectively responsible, or it has funded thousands of startups, to be clear. I'm sure the vast majority have failed. That's just the way these things work. But the ones that have succeeded are Airbnb, Dropbox, Stripe, Reddit, Coinbase, DoorDash, and others. It's really wild. And that is another theme we've been talking about. There was another article, just to really round this out, put a bow on it, because I know we're wrapping up. But there was an article from The Hub, and so that's Sean Spear and his friend, Sean Spear, friend of the show. And again, they address Carney's keynote speech in Davos. Let's park that for a second. But really, it's really about Canadian foreign investment abroad versus foreign investment into Canada, and all the issues we have with net foreign direct investment, capital outflows, lack of capital stock, not enough research and development spending. And really, it brings home the themes that we've been talking about. So much of the problems we have at home in Canada are self-inflicted and are within our control to solve, which is the real let's leave it on a positive note. That's what's amazing. Like, if there was genuine political will to solve the intra-provincial stuff, to improve our capital, our financial and small business funding, maybe, I don't know, get rid of 10 securities exchange commissions and just have one, maybe, just as a thought, to improve research and development spending, to keep capital at home. The amount of sort of like low-hanging fruit there is, in my view, is just really quite incredible. And there's just 3 different sort of data points that really highlight it.
Well, yeah, I mean, I think the biggest thing is to ask ourselves why, Canada's brightest and smartest continue to sort of basically move to the US, right? In terms of like starting up businesses. Like there's just not a lot of Canadian success stories in the entrepreneur space. And I think it's an important question to ask ourselves why. I mean, Rich, I don't know, I'm probably naive. This isn't necessarily my wheelhouse, but I imagine it's a little bit more complicated and a little bit more nuanced to solve. I think there's obvious low-hanging fruit that could be immediately rectified, such as not villainizing entrepreneurs like we have over the last decade. Specifically, comments that came from the Trudeau government around small business operators, effectively calling them tax cheats. But I think it's a lot almost like housing affordability, right? It's like, well, the low-hanging fruit is obvious, but yet we seemingly find ourselves unable to actually fix the problem.
Yeah, sure, but Yes, but there's also like the changes in the Impact Assessment Act. I mean, I've gone on and on and on to talk about Canada as a natural resource economy. It takes 10 years to open a mine. We can't put tankers outside of Victoria Island. We can't open a freaking pipeline. Like all these things. Like for a long, long time, research and development spending was basically lockstep with spending in mining and natural resources and exploration. That's decoupled. Like people think of natural resources as just a bunch of trolls, like in a mountain somewhere. That those are highly sophisticated, extremely well educated men and women who are doing science. Like all we do is talk about STEM. Engineering. Like that's a big part of STEM and the research and development that goes into it. And if you continually tell companies that you're closed for business, eventually they'll listen and move somewhere else. And so that to me, and refining is another one we've gone on and on about. Research and development spending in Canada is extremely low. I mean, the charts that are in the Hub's paper on it, maybe we can put it in the show notes, are damning, really. And the frustrating thing is, we've known this for a long time. There's just no real political will to change it. I still don't think there is. We'll see what happens over the next little while.
Just to summarize it, it's really a cultural difference.
That's true.
And again, people don't like to hear these things, but America has a culture, a business investment culture, where you take a risk and it wins and you make a lot of money, a lot of success. That's celebrated. Canada has a bit of a different culture. It is more.
But I challenge that, Keith, because before 2015, not to use that very loaded data point, GDP per capita moved from 1994 to 2015. GDP per capita moved lockstep with America. Our research and development spending was much, much, much higher. Our machinery, plant, and equipment spending was much higher. On and on and on. Like we know it hasn't always been true. So I agree with you. Perhaps now the culture is let's go get a government job because the benefits are great and you'll never get fired. But as recently as 10 years ago, we had incredible amounts of money being spent in natural resources sector, infrastructure spending, et cetera, et cetera. So I understand maybe on a relative basis, we have less of a culture of entrepreneurialism, but we have done it in the past. The trick is, can we do it again?
We'll find out. You have to tune in next week. I think that's a good place to wrap it up. But as always, enjoyed this conversation. If anyone at home, again, we do our best to get back to your emails and questions and feedback. We hear it all. We appreciate it all, even when it's negative. I think it's just always grounds us and shapes our conversations. And if you've got any sort of value or entertainment out of this pod, all we ask that you can share it with at least one friend, family member, continue to build the Loonie Hour community. It really ultimately helps us get bigger and bigger guests, which I think we're continuing to get. So it's very, very encouraging. And we'll see you next week.